Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this channel, I look at dividend stocks mainly, but if that's something that you're interested in and you want to learn about which companies to invest on, I also do dividends, growth stocks, and even sometimes penny stocks. So if you come to the right channel, definitely hit that subscribe button. Do me a favor and hit that notification bell as well as hit that like button. It helps the channel grow. In this video, we are going to look at a company, a stock that one of my viewers requested on. So if that's something that you want to do, definitely hit me up on the comments and tell me what company that you want me to do some research on and take a look at. As always, please remember that this is not financial advice. I'm not a financial advisor. With that said, let's take a look at this company. The company's name is B&G Foods Incorporated. Ticker symbol is BGS. It is an American holding company for branded foods. So you probably have this somewhere in your house or have used this product. Well-known company brands are like Green Giant, Cream of Wheat, you got Crisco, Dash, Weber, and then you also got your Ortega. So fairly popular brands that you probably use, trusted. Let's take a look at some of the companies and see what they think. So the first thing we're going to look at is Webull. Based on their price analysis, you can see they rate it as a hold based on 9 of them. About 77% is a hold. 22% they say it's underperformed. Now, if you look at their price target, they rate it as a high of 36, an average of 29, and a low of 27. Currently, it's about $30 now. Look down to the institutional holdings. You can see 103 have increased their position. 35 are new. They also have some decrease or sold outs with 83 decrease and 37 sold outs. Now, if we look down to CNN Business, their stock price forecast rated also similar in the high of 36, the median 28, and the low of 27, with analysis recommendations of 7 holds. Now, if we look at tip ranks, based on their stock analysis, they rated their smart score rated as a 5, which is neutral. So you want to get it around somewhere around here, 9 or 10, or even 8. Hedge fund activity has been decreased. Their investors is very negative. Now, if we look at their analysis, based on their rating, they rated as a hold. There's 5 of them, so 1 buy, 3 holds, and 1 sell. There's a 2% downside with the 12-month forecast similar, with a high of 36, the average of 29, and a low of 27. Now, if we look down further, you can see some of their detailed analysis. You can see this guy has a 18% upside, but the rest are pretty downside. Yeah. Now, if we look at Simply Safe Dividend, based on their dividend safety score, they rate it as an unsafe, which is 40. Dividend yield is about 6%. Market cap is 1.9 billion. Dividend growth seems to be very slow. Now, if we look down further, you can see the key metrics. Payout ratio is about a 104%, which is high for consumer staples. During the recession, they have cut their dividend. Now, if we look at the dividend growth, you can see the last 10 years has been pretty good, 11% per year, which is fast. Last 5 years, 7%. The latest is 0%, which is very slow. So they did cut their dividend. So uninterrupted streaks of 11 years without a reduction. Their growth hasn't been great, as you can see. But there, you get paid quarterly. January, April, July, and November, with the annual payout of $1.90 per share. So you get about 47 in that quarterly, yeah, as you can see from this one. Now, if we look at bar chart, you can see based on the chart, this is a 9-month chart. You can see very um, it's been consolidating in my opinion. So there has been so the red is the 20-day moving average, the blue is the 50-day moving average. You can see um, it's still kind of, it's not the upward trend that I would like to see. You can see the volume is pretty steady. MACD, there's a crossover here. There's another crossover here going down. The RSIS, it's under the oversold one. So just something to consider. Now, if we look further to the price targets, you can see currently based on 3, they rated as a moderate sell. Now, if we look down to the rating, you can see 1 strong sell and 2 holds. Now, if we look at simply Wall Street, you can see share price versus fair value. You can see it's 40% undervalued. They rated as a fair value of $54. So pretty cheap right now, yeah, based on this one. Now, if we look down to Yahoo Finance, you can compare it with the S&P 500. So the S&P 500 is the blue, and then the performance of this is in these the candlesticks. You can see S&P 500 is much more performing well, yeah, versus this stuff. So now, based on my position, I do have a position on this. I only have about 20 shares with my average cost of 29.45. So my total return is about 3%. I definitely like this one. It is not a analysis rating about 89%, which is also a hold for Robinhood. You can see the earnings is going to be accepted in March 1st. So you can see some of the buys I've been doing. So I definitely like this company. It is not a big player in my portfolio. As you can see, it's only a 1% diversity in my portfolio. If you were going to decide that this is one of your dividend companies to build that dividend portfolio, you might want to start looking at other else. This is a good one, but not a major player in my opinion. But always please remember, do your own research and do your own due diligence. As there are other companies out there that are great. I like it, but again, this is not a major player in my portfolio, but it's enough for me. I like it enough that it would be in my portfolio. But I think 40 would be my highest shares for this one, or even 50. But other than that, I'll probably use my money somewhere else. So with that said, definitely check out my other videos. Don't forget to hit that like button, and it also helps this channel grow. Thank you so much for watching, guys. I really do appreciate it. Please be safe out there. Stay cool. Keep investing, guys. And I'll catch you guys on the next video, right? Take care. Aloha.